Welcome back, XRP community, to another video on the channel. Today we're breaking down why the crypto market is correcting once again and why prices feel unstable across the board, not only in digital assets but also on Wall Street. Headlines look bullish at first glance. Grayscale's new spot ETF now includes XRP. Major German banks are signaling crypto custody, and developers keep shipping fresh code to GitHub. Yet the candles are red, the fear index is climbing, and traders everywhere are asking what invisible force keeps pushing risk assets lower. XRP is trading between $2.17 and $2.18, while Bitcoin hovers near $166,000 and Ethereum struggles to hold $400. Across the altcoin board, we're seeing 5 to 10% pullbacks. Tokens like XLM and Hedera wiped out last week's gains in a single session. That sort of drawdown is textbook corrective action, but context matters. To understand the sell-off, we need to zoom out and line up the macro headwinds now blowing straight into crypto's face. Middle East tension. Central Israel spent the night under red alert sirens after missiles launched from Yemen. Initial chatter spoke of one stray projectile. Radar later confirmed a coordinated volley. Whenever kinetic conflict erupts in an energy corridor, risk assets feel the heat. Oil spikes, freight insurance premiums soar, and investors sprint toward perceived safe havens. Crypto likes to market itself as digital gold, but in practice still trades like high beta tech whenever geopolitics turn hostile. Oil shock. Brent futures are ripping higher as supply fears collide with an already tight market. Expensive energy bleeds into every cost curve, from jet fuel to the tomatoes in your grocery basket, feeding the inflation story that central banks have battled for 2 years. If policymakers lean hawkish to keep prices in check, beta assets, from growth stocks to token swaps, usually take the first punch. Trade war noise. President Trump just confirmed he won't extend the July 9th deadline for the current round of negotiations. 1 month, the rhetorical target is China, the next is Japan, then Europe or Canada. That rotating spotlight makes it nearly impossible for multinationals to model forward margins, and equity markets reflect that paralysis. Crypto's correlation to the Nasdaq isn't perfect, yet tariff talk still lands like a body blow to sentiment. Domestic politics. The president fired off a new volley of social media grenades at Elon Musk, suggesting the Department of Justice investigate the billionaire to save the country a fortune. Whether you admire or despise Elon, the message is unmistakable. Top-down regulatory risk is back on page 1. When investigators circle the world's most visible innovator, smaller crypto projects naturally fear they could be next. Stack those vectors together, and the VIX, Wall Street's fear gauge, ticks upward. In such an atmosphere, good news gets discounted while bad news feels twice as heavy. Which brings us to Ripple's headline-grabbing marketing play, a massive digital billboard lighting up downtown Frankfurt. Frankfurt isn't just any city. It houses the European Central Bank, Deutsche Bank's HQ, and a dense web of settlement networks that move trillions every year. Plastering Internet of Value in 40-foot letters there 24 hours after Deutsche Bank announced upcoming crypto custody is brand positioning at its sharpest. Here's the paradox. Rails for mainstream adoption keep advancing, yet asset prices sag. The simple explanation is that macro chaos trumps micro wins 9 times out of 10. War headlines, oil shocks, and tariff threats drown out incremental milestones, at least in the short run. A deeper take, though, is that smart money accumulates during disorder. It just does so quietly and without fanfare. That on-chain data supports that view. XRPL whale wallets. Addresses holding 10+ million XRP are net buyers this week. Ledger throughput remains steady. Validator uptime sits near 100%, and settlement times stay under 5 seconds despite the sell-off. Meanwhile, smaller holders are trimming exposure and pushing coins onto exchanges, flooding social feeds with anxiety. That divergence between fundamentals and emotion often sets the stage for upside once the macro fog lifts. Need a recent example? Think March 2020. A pandemic gut-punched global markets. Bitcoin cratered under $4,000, and pundits wrote crypto's obituary. 12 months later, BTC printed $60,000, and alt season lit dashboards worldwide. Every capitulation flushes leverage and transfers coins from shaky hands to patient ones. History doesn't copy-paste, but human behavior rhymes with remarkable fidelity. So what's the practical playbook right now? Risk management. Deploy only capital you can afford to park through volatility. Information discipline. Track metrics that matter. XRPL wallet cohorts, ledger close intervals, the cadence of new pull requests, strategic perspective. Macro crises can accelerate adoption of faster settlement rails. If oil stays elevated and trade friction lingers, XRP's sub-penny transfer cost becomes a boardroom talking point, not just a crypto Twitter meme. Where are we today? XRP is outperforming many peers on a relative strength basis, holding key support even as social mood sours. The coin enjoys twin narratives: pure crypto upside and real-world payments utility. When one leg stumbles, the other provides balance, making XRP structurally different from meme tokens that rely solely on hype. Looking ahead, catalysts abound. The Grayscale fund has cracked the door on US ETF exposure. A dedicated XRP spot ETF would blow it wide open. European banks are openly preparing custody products. Asia-Pacific corridors keep onboarding remittance partners that crave instant settlement. Each puzzle piece tightens the long-term supply-demand equation. None of that guarantees a straight line up. Stay nimble. If you're dollar cost averaging, keep your cadence. If you're trading swings, respect your stop loss. Manipulation theories are fun to debate, but the chart doesn't care who's right. It only cares how much conviction capital survives each headline. Smash the like button if today's breakdown helped you cut through the noise. Subscribe for more real-time insight into the forces shaping crypto, and drop a comment below. Are you buying this dip or waiting for confirmation before diving back in? Your perspective fuels the discussion and helps everyone refine their strategy. Thanks for watching, and we'll see you in the next video as we keep mapping the crossroads of blockchain innovation and global macro drama. One block, one ledger entry, and one calculated risk at a time.